Hey guys. So because I fucked up yesterday and forgot to record or misclicked the recording, I figured I'd do another video today to at least get the SPY analysis going. And just like yesterday, we don't really start with SPY. We look at yields, we look at dollar, and we start from there. So US 10 and yields in general broke out, but they got rejected at 3.8, actually 3.9, and we closed below this resistance level. So what's been happening lately is that let's look at SPY. The correlation between equities and yields is not really going the way it did before. You can see like there's a big gap between or divergence between what equities have been doing. This is the inverted SPY basically, and the US yields. So the market hasn't followed yields down, bonds down, and we have a big gap going for it. So this will likely continue to happen for a while until we get the full turn. And what I expect to happen next week is see this continuation down in yields and dollar, something like this, for a back test of 3 point of the breakout level. Could go as low as here, and then we have the bigger breakout. But the move in yields and the dollar has been huge relative to what the market has been doing. So we have an 80% move in yields, and SPY has only gone down like 6%, I think. Let me look at it here. No, it's actually 3.4%. So you have an 18% move in yields and or on in the 10-year, and only a 3% move in SPY, a move down. So this is not really going to hold for long. Like eventually the gravity will catch up to equities, but let's assume we have a backtest of this breakout level next week in yields and in the dollar, and that's 5% move down. So a move down in yields will generate a proportionate move in equities. Maybe not of the same size, but if yields and dollar come down, equities will likely go up. And I could see anything from 3 to 5% move up in equities if this happens again. And assuming where we closed yesterday, 3% is the gap test, and 5% is, I think, 427 or something. Yeah, 427-ish. Most likely it's gonna be just the gap fill, but nothing else. And again, the possibility, we'll get into details a bit later, but the possibility is that equities go back up because both yields and the XY got rejected. They got rejected at a natural place to get rejected. Like we wouldn't want the move to become overextended because it loses its power then. But the XY can do this as well. So Friday was a magic day for equities basically because energy tanked, yields tanked, and dollar tanked, or maybe not tanked, but they reversed. So now back to SPY. So I'll turn off the trend lines and everything except this ones. So this is the actually let me show it first. So this is the trend line I drew uh, instead of the bear market trend line. And this is like a trend line between some of the tops and back tests from this thing, and now it's acting as support for us. So turning it off, let's assume we go down. So if we go down, we have the 50 MA at 396, we have the 200 MA at 393.85, so let's call it 394. We have Bollinger Band 2 at 398. So this seems very unlikely that we will get a significant enough push down that we get a breakdown. RSI is also pretty low, like we're at 52. We're gonna meet the RSI trend line soon. So all this confluence of supports most likely means that we will get a bounce. And this is kind of my thesis for next week. Like we go to 400, maybe go below it a bit, as low as 396 for the 50 MA. Let's say it's an extreme case. We even see the 200 MA, which is a Bollinger free move. So this is very unlikely. Like if we were to drop here, I would be going all in long next week, because Bollinger free moves are to be bought. They're very rare. Like this one went outside it, this one went outside it. Even if we continue down later, it's virtually impossible to continue down without having a significant bounce here. So let's assume we go to the 200 MA, we go to 393. We will then go back up, we backtest 400, and then maybe we continue down. But the tag of 393 or the 200 MA is a 100% buy. There's no way we don't bounce from it. Like something catastrophic would have to happen not to have a bounce here, and there's just not going to happen. So best guess is that we will bounce somewhere in this area here. And when I put on all the trend lines, let's take out this. We don't care about volume either. So look, we have support at 400. So this we have the bull market quote unquote trend line that until we break below this, we won't have a significant move down. So assuming it's next week, we probably do something like this. We go down, we overshoot a bit, we can go as low as the trend line, that's like 397, and that's the 50 MA as well, and then we go back up to at least 400. Like I said, even if we are bearish, the bearishness has to be proven by a move up that gets rejected. Like the true test in a move down is not how low it goes, it's how high it bounces. Meaning like we go down, we get oversold on the short term, and we have to bounce. The more the quicker and the stronger the rejection is when it tries to move back up, the stronger the momentum down will be in the next leg down. So the test for this drop will be not if we get here necessarily, but if when we attempt to go back up, whether or not it gets rejected and we do something like this. But let's at least see the drop to 400-ish next week, and then we take it from there. Um, so because of the expected pullback in yields and dollar, and because VIX hasn't really done the move I wanted. Like on CPI day, we still got the VIX crush. We were at -8 at some point, and it's not really what I wanted to see. Like we wanted VIX to go up, to hold the gains, stay above 20, and then maybe have another gap up and so on. So what we need for equities for this to be the big one on a move down is VIX to go crazy, like 5-10% gap up, and it keeps going up, closes at 15-20%, something like that. And we need multiple days like this, something like we see here. Like this was a move up plus 5%. It tried to go up and got rejected, but then it gapped up a lot and finished 15% up. And that's kind of a signal, like a gap up and hold is the signal that this shit is for real, and the bears are back in town. And it doesn't seem like we're doing this. Like VIX is getting rejected by the previous trend lines. Like this was an old trend line that held for two lows. This was another trend line that held, and now it's looking like it's back testing it and getting rejected. So it doesn't seem like we're ready yet to get the full breakdown because VIX is not holding gains. Okay, back to SPY. So we're bouncing on this trend line from the August top and the backtest on the March top. I think we'll actually go below it. It was a close below the 20 MA, so bears are still short-term in control. It's just that we have a lot of strong support below and we can't really go that far. So we go down. Let's assume we go down and then we turn. How high do we go? So first off, 410 is a question mark. This is kind of the first big test where we can turn back down. So we go back to 410. We could retest the trend line higher than 400. And again, the more we test it, the bigger the chance that we break down and go below it and we start the big bear drop. If we break above this, our short-term target remains to be the gap fill at 421.22. This is confluent with the rising wedge trend line, and that's kind of it. And then we do maybe even this again. It depends. But I would guess we get a big rejection on 420 if we get that high, and then we test this again, and this is when we might get a breakdown. Another thing that supports this view is the delta profiles. So let me show it to you. So this is the delta profile and OI profile for March OPEX. As you can see, we don't have many open interesting calls below 400. So this is kind of the where we lose fuel in the short term. And this is all expiration until March OPEX, excluding March OPEX. It's pretty bullish. 400 should act as a rejection, as a repellent. Now we're at 408 where we closed on Friday, and we can continue going down until here. But as you can see, there's really no put OI beyond this, and no call OI. Or actually, there is put OI, but there's no call OI, so the move would kind of stop around 400. We'll overshoot a bit, but that's kind of it. We cannot go lower. And when we look at the OI profile as well, at the breakdown, we see that for Monday we stop at 405 even. Like we kind of stopped the drop on Friday based on this, that we ran out of fuel here. And the 24th, which is the solid green here, doesn't have a lot of OI either. It stops at 400, and then the following weeks we don't have call OI at all. So the OI profile March, delta profile pre-March OPEX. So this is it. So this is by expiration. As we can see, the majority of the put delta is for Monday, and it will expire and give a bit of a backwind to equities. It doesn't mean we go up big, but unless we continue pushing, we get a continued push down to turn more of the OI in the money and feed the move down, it will run out of steam relatively quickly. But when we add March into the equation, so this is the one without March OPEX, this is the one with March OPEX. We see that the situation changes a lot. So because of this, I kind of think we stay around the current levels, like go to 400 and go back up to 410 at least until the end of the month. And the closer we get to the end of the month, the short-term OI, which is very call focused, disappears, and the big magnet, which is this whole put thing here, becomes more relevant, and it starts drawing us closer. So I kind of think we might get a move down at the beginning of March, and we will keep dropping until the end of March because we will be under the influence of this. And the limit here is much lower, like 390. We can even go to 380 or something like that. We'll see. And this is the OI with March included. So this is without March. This is with March. You can see the difference. Like we're picking at 100,000 put OI before excluding it, and we go to 250,000 including March. And this 390 and 400 OI was gonna be a huge magnet as we lose the short-term flows at the beginning of March, and as we get near to March OPEX in reality. And same thing, this is the delta profile. This is what it looks like without March OPEX. This is what it looks like with March OPEX. And we have a lot more fuel to burn uh, once if we had a move down going into March OPEX a bit later on. Sorry. Okay, so to wrap it up, for SPY at least, this is kind of what I see happening. Like we continue down, we overshoot 400 a bit, then we get a big bounce, we go to at least 410, uh, might bounce again here, I don't know for sure, and then we might go here, or actually let's do the one. So we go, this happens next week, we retest 410-ish or 420-ish by the beginning of March, and then we have a bigger drop, and we probably break down, and we see something like this, or either this or here. Most likely, if we get this high, we will just go to 400 again around here. But if we pick out around 410, the chances are much bigger that we get a breakdown once the flows from March kick in. So another reason why I have this bullish view in the short term is that there's a lot of individual names that are starting to look good, or they seem close to bottoming on the move down due to various reasons. So I'll look at a couple of tickers that were requested. First one is Johnson and Johnson. This one looks quite ready. Looks like it bounced. It doesn't mean that it's going to continue up immediately, especially if the drop continues in the market next week to 400. But most likely this was the low. We have a channel here that lines up perfectly. We have a trend line that marks the two bottom. We have a bullish divergence. So what I would expect to happen in the scenario that the market continues down a bit is we have a short drop like this, and then we start going up. This is the first target. This is the second target. It won't be like a straight move up, more like this might get a bigger rejection, it goes back up, eventually it goes up. Like with this the new potential resurgence in inflation, uh, defensive stock like healthcare and cyclicals are going to probably outperform again. Uh, and most likely healthcare has bottom, like CVS, Johnson and Johnson, Pfizer, stuff like that. Yeah, look at Pfizer as well. We're in the demand zone, bullish divergence. It looks about ready to go back up. Plus horizontal support. It's a pretty good setup here. CVS. CVS doesn't look that good. Probably it will gap fill the earnings move, and then it will go up like this. Okay, Boeing. So I talked about Boeing that I don't like it at all. I really, really hate ascending patterns, ascending wedges or ascending flags. And this one has an ascending flag. Plus, it is at double bottom target. So this was a double bottom. And let's measure it. So 51, 52-ish. If we go to 102-ish, 222. So it almost let's 223. So let's call it 225 just for to have a round number here. It almost reached it. It might try one last time to get to it. In the market continuing to be bullish until the beginning of March scenario, like it could have one last move here, like this to 225-ish, and then it's a clear short. It will have a substantial pullback. Most likely the pullback will be here. 50% retracement of the move. CAT. So CAT, I like it quite a bit. It reached the channel target. Now it's going to try to move up, and I think a move up was the target was, what was it? So let's hear. It's 283-ish. 161 Fibonacci extension from the previous high. Why I like it is because of this pattern here. So like this RSI pullback with price going sideways, it's a bullish consolidation pattern. Basically, you have a RSI pulling back. RSI pulling back means correction, but price is so strong that it doesn't even drop that much. It actually goes sideways. So with RSI being reset from a pullback, uh, now it has the ability to go back up, and this is what it did. And now we had this divergence here showing the pullback is about to come, and it did. But RSI pulled back quite a bit. Like we even made a lower low compared to the previous low. So once again, it's the same situation as here. We have a pullback, price kind of went sideways or didn't correct a lot, and now we have a room to go back up on price. So you could do something like this. And as you can see, the move up was a lot stronger than the move down was. So this is bullish with like I said, the target for this move being 280-ish. Oh, AEX and DAX. Uh, I don't like EU equities. They have this horrible looking ascending wedge, rising wedge, and I don't like this at all. Like they might continue going up, but the risk reward on EU equities is much worse than US equities right now. I will stay away from them. So proceed at your own risk. I, with US continuing to go up potentially, this won't break down either. So they will follow US equities, but I think the risk reward for US equities is much better than for EU equities at the moment because EU had a much bigger rally than US. Like DAX is nearly at all-time high again from the lows. 31%. AX is 26, while SPY I think was 17 at the top or something like that. Not even Q's got that high. I see Q's. No, actually Q's went pretty well, 20%. Still, stay away from EU, I think. So Netflix. Netflix had the same type of sideways correction pattern as Caterpillar had, and it did the full gap fill from the earnings crater, and it's consolidating above it, like it hasn't broken down yet. There's again with the potential of the market continuing down to 400. I can see Netflix continuing a bit lower and retesting the lower trend line before the final uh, move up. So this is kind of where I think it goes. The maximum possible on a move up would be 450-ish. I don't think it fills this gap yet, and this resistance zone at that starts at 430 is probably going to stop it regardless of what happens afterwards. But a move down, a move up, and then a collapses I think is in the books. This should also become divergent when it moves up. Like when it makes a new high, most likely it's gonna be something like not that much, even lower like this. Nvidia. So Nvidia is very similar uh, to everything else so far. Uh, I had a short on Nvidia and closed it because I didn't like the way it bounced on this channel. So when I did a review yesterday, I had this channel going on. I then doubled it to see what the target would be, the max target would be. So it might continue down, but I didn't like that we're going into earnings. It might have a run up. If earnings crater, I think a buy is around here at 192. Um, so that's kind of the reasoning. Like when I shorted Nvidia around here, it went against me. I got out on Friday for around break even, and I regretted the moment I bought it because I later found out that it has earning next week. Like I didn't notice, and I don't want to hold going into earnings. If you do that, it's up to you. Maybe they say AI one too many times and it goes up. Maybe they don't say AI enough and it doesn't go up at all, or it craters. So take those risks if you want to. I don't want to. So now speaking of the channel target, so we have this channel here. We double it to get the target. It lines up pretty well. So let's say if we have a pullback, let's say we have earnings, we have a pullback down to here to 190, and it bounces. If we have this large of a pullback, RSI will go pretty low, like I would assume something like here. This is a bounce point. We then have a room to go up quite a bit. So assuming earnings miss, we go here, then we bounce, and we will probably go up until we hit this trend line, like this. And at the same time, price would do something like this. Maybe it hits this again. So this is kind of what I want to see. Uh, if earnings are good, obviously we will just go from here. But I would like to see a bigger correction to be bullish again. I don't think it can be as strong if it just goes up. If it goes up directly from earnings, let's say it does this, but it's an immediate overbought and probably a great short around this level. Baidu, no, Baidu, Tencent. So we have a supply zone here. So this is kind of the top of the rally. This is looking kind of weak. I think it continues down, and this is the buy. Then it goes back up here and then down. Kind of the same reasoning as Nvidia, something like this. It will be divergent and then down for the bigger drop when it comes. Dow. Yeah, something somewhat similar. This moves very little, so this is like 8% down. British American Tobacco, it's the same reasoning as with Johnson & Johnson, Pfizer, and so on. So this is a defensive stock with the fear of inflation coming back. This will likely start performing now. I don't like this how it looks on RSI at the moment. I think we get a short-term pullback. It also has a small gap here, so this is kind of the target. So down, fill the gap, then start going up, and might go as high as here. Race is one of the craziest charts I've seen. Um, I think I just doubled the channel here. So this was the old channel. It broke out. It kept going. We double it. This is our target, and it lines up with the ascending wedge. And most likely this is what it's going to do. So we go to all-time high, maybe overshoot a bit, and then have a significant pullback. And the pullback target is 50%. Like this was a huge move up. So we should see a 50% retracement, assuming we go here. No, this is actually much better than 50%. So this would be like 61%. This is potentially a long-term cup and handle. Go this, then it does the handle. Enphase is one of the things I liked a lot. So we have a bullish divergence on RSI. We have this potential very large uh, falling wedge. We have the long-term channel that's been respected multiple times, and with how much it dropped in the last 2 months, it's quite oversold and preparing to go back up again. I would love for it to go as low as the trend line, to which would be like 175-ish, but I don't think it will go that low. So watch this one. It's probably a good a good opportunity to go long somewhere around here, and when it goes, it will go big. Apple. So Apple sideways consolidation, RSI is pulling back. The common pattern here. What I think happens, and I have this, I will do it with Apple and Tesla at the same time. Let's add Tesla here. So we have 150 as the line in the sand, right? What I think, and then Tesla, we have 200. 200 as the line in the sand. Let's draw it here. We put it at 200. We're basically there right now, like 208. And Apple with its 150. And let's say we go down. We go down. We close. Maybe we close. Maybe we don't. But we go down and fill this gap here at 147. Too early. So we go down to 147. Bears get excited. Tesla is below 200. Apple is below 150. We got them, boys. We're gonna fuck them up. But then it gets bought. all those bears that bought the breakdown below 150 and 200 are now gonna feed the move back up, and because the move is comes after the corrective move in RSI and price as well, the move up is going to be pretty big. It will potentially have enough momentum and energy to go back up and maybe even retest the channel top, because this is where the rally stops for the previous three times. So that would be 165-ish, 166, depends on when it happens. But I wouldn't rule it out of the question completely. And the same thing will happen on Tesla. Like imagine we get a drop, we close below 200, we tag the trend line, bears are ecstatic that both Tesla and Apple are breaking down, and we're winning, and then the dip buyers come in, and all those bears got trapped below 200 and 150, and now have to cover, and they continue feeding the move up while the retail buys the dip and think they're geniuses. So for this to be invalidated, we would have to have a close below 193 for Tesla. So basically break below the this trend line here. And Apple, sort of similar. This is a sorry, this is a huge trend. We close below it, but it won't matter that much if we bounce off after this gap fill here. Tesla, you got the idea. BHC. So BHC, I think I looked at the long-term chart. It looks bullish, not gonna lie. But this is too little at the moment to be considered a breakout. So what could potentially, what we want to see is the weekly close, weekly continuation up, and we want the monthly to close above this orange trend line here, because it's quite common to have this kind of thing. So I'll show you. So let's say it tried to go up, it went up quite a bit. So this was, let's see, what's the level, 1849, and it went as high as 2059, then it went as high as 23, then it went as high as 20 from 1829. So these are big moves. These are not like it barely went above it and then it closed above it. It's like 25 fucking percent. And it still closed below this level after going up 25%. So what I fear here is exactly this level, and this comes from here. It's exactly the same thing. So for this to actually be bullish, we need to see it close above it, both on the weekly and the daily, and have a, a close above it and stay above it. So if next week we have a close below this line, or the monthly gets rejected, I'm not that bullish on it. Like what could happen is a prolonged consolidation period in this range. So if next week we close above the orange line, below the orange line, most likely it will continue going sideways around here. If we close above it, this thing is for real, and it has a lot of room to go up. And these are the targets, like target 1, 11, target 2, and then it gets pretty quick. Most likely this is the last big resistance, and then it just goes here. This thing could double if the breakout is real. Okay, then BOIL. So for BOIL, uh, volume. I wanted to see volume. So for volume, this is a marginal new low. We make a new low, but it's marginal. We have a bullish divergence on RSI, and this huge volume push that fails to move price significantly in relative to previous lows, like we went lower, but it wasn't that significant, is an exhaustion move. It's also a gap down, so this is kind of textbook exhaustion gap down on high volume that that doesn't have a big impact on price. So I'm gonna call a bottom on oil and natural gas in general. Most likely we go up from here. Could be some further consolidation, but I it, don't think we go much lower than the current levels. VLD. So for VLD, this is a cup and handle most likely. Cup and the handle is coming now. The handle is either a 0.68 correction or a zero point 0.5 correction. The most common one is 0.5. So we go here. Uh, we or we either go to 3, but most likely to 237. So this is kind of what's going to happen. This, and then we retest. If it has momentum, it's good and it goes up. If not, breakdown. But most likely it's going to be 50% correction, 50% pullback here, then up. And if it breaks out here, like the cup and handle breakout, is the target is to double it. So let's measure it. So 246. So we need to be at around 5, something like this. Most likely it's going to be exactly this. And this is also a double bottom. So we're halfway to potentially making a double bottom. It won't be a continuous move up. So this down and then as high as this. And when it breaks out from here, most likely it will have another consolidation. It will go as low as this. It backtests and then goes up. It will double again. And I think the target is around here. Zim is bullish. I quite like it. Once it breaks through 22.8, 20, or whatever the fuck this is, 23. Let's call it 23. It should move up relatively quickly. There's a big gap and volume pocket here, volume air pocket here, and then it can easily get to 31. The big problem is 23. Baba. Baba, I like a lot. It has earning next week, so did not play it, but you can see how large a pullback we have in RSI. It's also followed in price. We have a big gap to fill above. We have some gaps to fill below. What I would like to see next week is earnings dump. It goes here. 88, 89 is a buy. We fill both gaps here. No way this goes lower. Like our RSI would be super oversold, and we go back up. So I would buy BABA at around 88, and most likely we will see a retest of the highs. Sophie, again, big pullback in RSI, but it doesn't seem to be over yet. It might be, but I would really like to see the gap fill. So I would like to see this. Very similar to BABA, RSI would be very low. We bounce, buy the gap fill, and it will go back up, probably retest the highs. It might actually bounce here, but because the bigger the pullback, the more energy for a bounce. So a, a bounce here would most likely not take it as high. Most likely it's going to be a lower high. Gold. So gold doesn't exist per se as a chart. It's just reverse DXY. At least at the moment. Like in the past, it wasn't exactly correlated, but right now the correlation is virtually 1-to-1. So this is the dollar, and this is gold. So gold right now is an inverted DXY. And because DXY is going to pull back, that means gold will bounce up. this is probably exaggerated, like we have a level here. It depends how low DXY will go. So this is the bare minimum we will see, but since DXY is probably going for a move up, a bigger move up, gold will most likely continue going down. So either this or this, something like this, DXY. And DXY will just pull back and continue going up, something like this. Roblox, similar to Sophie, as a setup, it has a big gap to fill. This is a buy because it would be a major pullback in this area here, and maybe it goes as high as this if we get like a meme craziness kind of thing. I personally hate Roblox. It's a shit company making a shit game that is exploitative, and don't let your kids play it. GE has a rising wedge. It hasn't broken down yet. It probably will, but it's also likely to bounce. So I don't think this is it's ready yet on the next one. So most likely it will do this. This is the level where we want to see it. It's also 50% retracement most likely. Wait. Yeah, pretty much 66. Yeah, I can see it. Lift. So lift is in the buy zone. Uh, Probably gonna continue to be weak. Like it got rejected here. It tried 1, 2, 3 times, uh, making a lower high each time. So I think it's gonna test this demand zone and then go up. I think it gets to 12 almost for sure. If it can push through 1230 or whatever this is, 1220, it can go up pretty quickly because this is an air pocket now. So all this area here, just like Netflix had that air pocket look on their gap, and you saw it filled it pretty quickly. We have a 45% air pocket. So the struggle is gonna be up to here. Once it gets above it, this air pocket won't bring much resistance. So probably goodbye around 10. Uber. Yeah, I already do it. This feels good as well. So we go down, we retest this high. There's a small gap to fill here. We fill that gap. It's the mid channel point as well. So it's a confluence of supports. Could be a bit lower, like go as low as 30 to get in the demand zone where the rally started, and then retest the highs of the channel and then have the breakdown. Stock picking monkey asked about this one. I don't like the way it looks. It's funny because it looks like a her, or it looked like it to me. It looks like this. Like this was a her, and then he did this. This looks very similar to me. From what he told me, it's a biotech waiting for some approval. Those are double-edged blades, so it might cut you. You might make 10x on it. It might go to zero instantly because when it craters, it craters a lot. When it goes up, it goes up a lot. So if you want to play something like this, do so at your own peril. idea is already at the trend line, at the, like this flag trend line. Yeah, something like this. So basically this is two horizontal ranges. We had this range, it stayed in this range. If it goes below, it will bounce here and then go in this range again. Qs at channel top could probably go to here. This is a demand zone. So 293, 95. Again, this is like a classic bear trap. Like we go below 300, bears go crazy. Oh my god, we lost 300. It's our time to shine. Let's short the fuck out of it. And then deep buyers come in and then we get squozen out of it. Oil, I don't like the look of this that much, but I don't really see it going below 75 either. Buy the trend line test, I guess. Don't even think it goes that low. This will definitely make a bullish divergence if it goes lower. I think we already have something. So we already have this. If we get to tag the RSI trend line, it's a buy as well. Should be around 73.5. This in theory is a bullish development, but the long-term view is still not that good. I like that we have lots of down weeks. Like this is we're probably 1 to 2 months away from an actual move up. This is a very bullish looking chart if we don't uh, make this a full body candle red, like a full body red candle that closes below 75. If this stays like this, we're very close to oil going crazy again, like a maximum of 3 months away. You see the volume also going down, like the move down is losing steam. See similar pattern here, even though we like it kept going lower, but the bottom wicks were always there. And then one good candle, one last back test, and off it goes. Yeah, I think this is it. I'll as the last thing, I'll go through the delta charts a bit. Uh, there were a couple I wanted to do. So this is delta difference. Uh, Imagine, like we can draw trend lines on this as well. It won't make a difference. So imagine we have a trend line going either like this. So we stop around minus 40%, which is still a long way to go from here. Or we actually draw a trend line like this. We can ignore this small move below the trend line. And we see that the bottom is going to be around, oh, the trend line will be around 0%, like minus 5, 10, something like that. That's very likely to hold. There was a different one. Here. So basically, if we were to draw a trend line, it would be this. It goes close to this. It continues, goes close to this. It continues, goes close to this. So the trend line works on this bigger pattern as well. And now we broke out. And after we broke out, what if we draw a trend line here as well? So let's use the blue line as reference. Blue line, it goes through here, it goes through here, and it goes through here. So we don't have a lot of room to fall. Like at around 20%, we should hit a longer term trend line. Or if we do this, just these two, we go through here, about the same thing. So I don't think this is gonna be the big one. And even going, I can let's see, let's go to Delta Data, and I can play with price. And this is the mean norm. Let's say we go to 400.01. So we're gonna be at 27%. And if we go to 397.01, my bad. The fuck is wrong with this thing? Ah, wait, I fucked up. It's supposed to be here. Oh, so 397.01, the last one was hidden. So this was static. So we go to 15.71%. This is already looking like a good buy, and we would be below the trend line. And at 399.9, I shouldn't be doing this. 50% as well. So basically, once we get to below 400, we're already at a good buy point. And if we hold the trend line of the delta positioning thing, we should be good with a good buy there. Let's fix it. Yeah, that's it. So thank you for watching. Have a good day. Bye bye.